Okay, uh, our first topic will be devoted to the overview of financial innovations, and I would like to welcome everybody to today's lecture on this topic. And I'm really excited to explore with you how technology and creative thinking are revolutionizing the financial services industry. And I would say that throughout the history, financial innovation has been a key driver of economic growth and development. From the invention of money itself to modern digital payment system, for example, innovation, I would say, has continuously transformed how we manage, move, and invest money. And in today's lecture, we'll examine what makes financial innovation unique, and we will explore different types of innovations from mobile payments to decentralized finance and discuss both opportunities and risks they present. And this knowledge, just to me, is very critical for everyone, for example, looking to work in financial services, as the pace of innovation is accelerating dramatically with new technologies like AI, blockchain, APIs, which are reshaping traditional banking models. And we will also look at real examples on how both established banks and new fintech companies are really driving innovation, and discuss the delicate balance regulators must strike between fostering innovation and maintaining financial stability. So, and finally, I will encourage you, I would encourage you to think critically and engage in our discussion, as many of you will likely be directly involved in shaping financial innovations in your future careers. First of all, please fill in a very short form on the question, what is innovation as to you? So you can scan this QR code and try to answer the question. So, therefore, before we dive into the financial innovation specifically, let's start from that. So, I will give you a couple of means. Please, when you answer the question, think about some recent innovations you've encountered, maybe a new app you're using, a service that has changed how you do things, or a product that solved a problem in a new way, for example. And for example, I would tell that when I ask this question to industry professionals, they often focus solely on technological breakthroughs. But innovation is broader than that. And for example, if you consider companies like Uber, their core innovation wasn't the technology itself, but how they reimagined the entire transportation service model. And meanwhile, I want you to consider what makes something truly innovative. Is it enough to just create something new, or does innovation require successful implementation and adoption? So there are the questions. So let's go on. So the next slide. Uh, Innovation refers to creating something new or different. So first of all, let me share with you the definition from Merriam-Webster Dictionary, which states simply that innovation is the introduction of something new. But in fact, there is much more to unpack here. So I want to emphasize a crucial distinction. First of all, uh, innovation is not the same as invention, for example. And let me explain why this matters. First of all, innovation is creating something entirely new, but innovation is about successfully introducing and implementing new ideas, products, or methods that create value. And let us consider the example. For example, Thomas Edison as you know, didn't invent electricity, but he innovated by developing a practical electric light bulb and, more importantly, a system for electric power distribution that could be widely adopted, for example. And in the financial world, this distinction is practically relevant. For example, mobile banking wasn't a new invention at all. It combined existing technologies like smartphone and banking services, and the innovation was in how it transformed the way people interact with their banks. What makes innovation powerful actually is that it represents a break from traditional approaches. And furthermore, it requires not just creativity to come up with the ideas, for example, but also the initiative to implement them successfully in the real world. And this is why innovation is absolutely crucial for the growth and competitiveness of companies and industries. And I would say that in today's financial sector, those who fail to innovate risk become they are becoming obsolete very quickly. So the next slide. So there are different models of innovation. Now that we understand what innovation is, let's explore different ways to classify it. So you may have heard terms like, for example, disruptive innovation or incremental innovation. And today we'll try to understand exactly what this means. So first of all, let's look at this innovation matrix that classifies innovation based on two key dimensions, like technology it uses and the market it serves. And this framework is particularly useful in understanding financial innovations. So first of all, let me give you some concrete examples from the financial sector for each type. For example, an example of incremental innovation. Think of your bank adding new features to their mobile app. It isn't important, but it's not revolutionary. Yeah. And as for the radical innovation, consider the introduction of mobile banking itself. Therefore, it completely changed how we interact with the banks. And as for disruptive innovation, let's look at the blockchain technology, for example, and cryptocurrencies. They are creating entirely new markets and challenging traditional banking models. And what's fascinating about this matrix actually is that it helps us understand why some innovations succeed while others fail. A highly radical technology might fail, it's true, but if it doesn't match market needs, while seemingly simple incremental innovation could have massive success if it solves, for example, a real customer pain point. So I wanted to notice how fintech companies often start with one type of innovation but evolve over time. For example, for instance, PayPal began as a disruptive innovation but has now become a part of the mainstream financial system. The next slide. Let's talk now about the most innovations most innovations are incremental improvements in existing concepts, products, or services. So let's dive deeper into the most common type of innovation we see in the financial sector, the incremental innovation. So despite all the hype about disruption, for example, most successful innovators and innovations are actually incremental improvements. For example, in banking and finance, incremental innovations happen all the time. And think about contactless payments, for example. They weren't revolutionary change from chip cards, but they made transactions faster and more convenient. And this is really a perfect example of improving an existing product to attract, for example, more customers. And the beauty of incremental innovation is that it's generally less risky and more immediately profitable, I would say. For example, when a bank improves its online banking interface or adds new features to its mobile app, so it's usually responding to specific customer needs and can see quick returns on investment, for example. But however, and this is crucial to understand, relying solely on incremental improvements can be dangerous. And let me explain why. While you are making small improvements to your existing products, someone else might be developing something that will make your entire business model obsolete. So that's why successful financial institutions typically pursue a balanced approach. Take JP Morgan Chase, for example. They continuously improve their existing service while also investing heavily in blockchain technology and artificial intelligence for future breakthrough innovations. And the key takeaway here is that while incremental innovations are vital for maintaining, for example, competitive advantage and customer satisfaction, at the same time, they shouldn't be your only innovation strategy. So the next slide. Now let us talk about the one of the most powerful yet frequently misunderstood types of innovation, disruptive innovation. So this concept was introduced by Harvard professor Clayton Christensen in 1995, and it's particularly relevant to what's happening in finance today. So the essence of disruptive innovation, and this is crucial to understand really, is that it initially serves a small, often less profitable segment that established companies tend to ignore. So let me illustrate this with a modern example. For example, when PayPal first started, traditional banks didn't see peer-to-peer payments as a significant threat because it seemed like a small, marginal market. Um, Look at the example on our slide, Tesla and Netflix, for example. Similarly, in finance, consider how neobanks like Revolut and N26 started by targeting young, tech-savvy customers with basic services. Traditional banks initially dismissed them because these customers weren't their most profitable segment. And one of the most fascinating aspects of disruptive innovation is that it often starts with the so-called inferior product by traditional metrics. And when digital wallets first appeared, they couldn't offer the full range of banking services, for example. But they excelled at one thing, making payments simple and convenient. And here is the key point, actually. Disruption begins and happens gradually, but its effects can be devastating for established players who don't adapt, for example. For instance, we've seen this with traditional banks who initially ignored fintech competitors only to find themselves scrambling to catch up years later. And this letter for future finance professionals is very clear. Uh, and that is, don't just look at who's competing with you today. Pay attention to new entrants serving segments you might be ignoring. And these could be tomorrow's major competitors. So the next slide. Let's examine another crucial type of innovation that's particularly relevant in banking, which is sustaining innovation. And this is how established companies stay competitive and grow their market share. For example, if you look at the three key points on our slide, sustaining innovation improves product performance and targets demanding customers who are willing to pay premium prices, for example. And in banking, think about how Goldman Sachs continuously enhances its traditional platforms for institutional clients, or how private banks develop more sophisticated wealth management services. And what's fascinating about sustaining innovation is that established companies usually win these battles. For example, JP Morgan, for instance, has successfully maintained its leadership in investment banking by simply continuously improving its services and technologies. And the bank invests billions in technology each year to enhance its existing products. But here's the interesting contrast with the disruption, I would say. You should notice how the iPhone is mentioned as an example with that transitioned from disruptive to sustaining innovation. So we see the same pattern in fintech. For example, companies like Square started as disruptors, but now increasingly compete through sustaining innovations. So, and let us emphasize a critical point for your future careers, for example. That is, established companies are generally very good at sustaining innovation because they have the resources, expertise, and existing customer relationships. However, these same strengths can make it harder for them to pursue disruptive innovation. So, understanding this dynamic is crucial whether you plan to work in traditional banking or fintech. And success often depends, therefore, on knowing when to pursue sustaining innovation, so when to attempt disruption. So, the next slide, just a second. So, let's turn our attention to radical innovation and perhaps the most dramatic and transformative type of innovation we see in finance. What makes radical innovation special is that it becomes and combines revolutionary technology with completely new business models. So, looking at our examples, for example, personal computers, internet, robotics, artificial intelligence, blockchain, and even energy storage, all of these technologies didn't just improve existing systems, they fundamentally transformed how we do things. And in finance, blockchain technology is a perfect example of radical innovation. So let us explain why blockchain is truly radical. It's not just a new technology for processing transactions, but it introduces an entirely new way of thinking about trust and intermediation in finance. And it challenges the very foundation of how traditional banking works. And another example of radical innovation is finance. In finance, is artificial intelligence and risk management. It's not just automating existing processes. It's fundamentally changing how we evaluate creditworthiness by analyzing data patterns that humans couldn't possibly process. And however, and this is crucial to understand, radical innovations are rare and extremely risky. And for every successful blockchain application, there are dozens that fail. And this key is that when radical improvements do succeed, they can transform entire industries. So the next slide. Now we come to the crucial insight that will help you to understand successful innovation in finance, which is the most impactful innovations often combine elements from different categories we've discussed. So let me give you a powerful example from the fintech world. Consider, for example, how mobile payments platforms like Apple Pay combine multiple types of innovation. First of all, there is a list. It's incremental in how it improves the payment experience. It's sustaining in how it builds on existing card networks. It has disruptive elements in how it changes consumer behavior. And finally, it has radical aspects in its integration of biometric security. And this is particularly relevant in modern banking. For example, if you look at how the most successful digital banks combine different aspects of the innovation, for example, incremental improvements in user interface, sustaining innovations in core banking services, and disruptive approaches to customer acquisition, and, for example, radical innovations in data analytics and personalization as well. What's fascinating here is that successful innovators don't limit themselves to just one type of innovation. They really understand when to use each type and how to combine them effectively. The key lesson here for your future careers is that you shouldn't think of these categories as rigid boxes, for example. Instead, think of them as tools in your innovation toolkit that can be combined in different ways to create compelling solutions. So, the next slide. And now, let us understand different types of innovations. And let's focus specifically on financial innovations, which are the changes that are transforming banking and financial services today. So, financial innovations are fascinating because they are essentially about solving problems in how we manage, move, and invest money, for example. But they are not just about technology, they are about new financial instruments, new institutions, and even entirely new markets. Let me put this in perspective. Over the past 30 years, financial innovation has completely transformed banking. And if you think about it, 30 years ago, we had to visit a physical bank branch to do almost anything. But today, most of us rarely set foot in a bank. But here's what makes financial innovation particularly interesting. It is driven by very specific needs and limitations in the financial sector. For example, the need for faster, cheaper payments led to innovations like mobile wallets. And then the demand for broader access to credit sparked peer-to-peer lending platforms, and the desire for more efficient investing gave rise to robo-advisors, for example. And what is very crucial to understand here is that financial innovations bring both benefits and risks. So, as we will discuss later, the same innovations that make finance more efficient and accessible can also create new forms of risk and instability. So, keep this dual nature of financial innovation in mind as we explore specific examples, because every innovation we'll discuss solves certain problems but potentially creates others. So, the next slide. Let's examine what makes financial innovations unique compared to innovations in other industries. So, first of all, these characteristics are crucial for understanding why financial innovation follows different patterns than, say, innovation in manufacturing or retail. First, notice the intangible nature of financial innovations, because unlike a new smartphone or car, most financial innovations are invisible. They are systems, processes, or business models. For example, when Visa introduces a new payment processing system, you can't see it. But it affects millions of transactions globally. The second characteristic is fascinating because financial innovations can be applied across geographies almost instantly. For example, when TransferWise, now it is called Wise, developed a new way to handle international money transfers. So they, on the first stage, they could roll it out globally much faster than, say, Starbucks, which could open new coffee shops. And the third characteristic is particularly challenging for financial institutions because these innovations are rapidly replicable. And when one bank introduces a successful new feature in their mobile app, competitors can often copy it within months or even weeks. And this is why continuous innovation is so crucial in finance. And finally, and this is what makes financial innovation so powerful, they can have an incredibly high impact relative to their cost. Because a single algorithmic trade and innovation can affect, for example, billions of dollars of trades, or a new mobile payment system can transform how millions of people handle money. And therefore, there is a very huge effect of innovation. And understanding these characteristics is essential. So, the next slide. Now let's explore the major categories of financial innovation that are reshaping the industry. So I will walk you through each type with real-world examples that show how these innovations are changing finance. First, let us look at the new financial products and services. For example, mobile payments like Apple Pay, peer-to-peer lending platforms like Lending Club, and robo-advisors like Wealthfront aren't just digitizing existing services. They are creating entirely new ways to manage money. And then we have new delivery methods. For example, online banking might seem obvious now, but it revolutionized how we interact with the banks. And consider how remote insurance policy issuance during the pandemic transformed, for example, an industry that traditionally required face-to-face meetings. And the technology category is particularly exciting. For example, blockchain, big data, AI, they aren't just buzzwords. They are fundamentally changing how financial institutions operate. For instance, JP Morgan's Coin project, which is a contract intelligence abbreviation. And the software of this project can review commercial loan agreements in seconds instead of hours. So, new business models are perhaps the most disruptive category. For example, crowdfunding platforms like Kickstarter and marketplace lenders like Prosper, they have really created entirely new ways to connect those people who need capital with those who have it. And the last two categories, new tools and methods and infrastructure changes, they might be less visible to consumers, but they are equally important. And think about, for example, how algorithmic trading has transformed stock markets, or how real-time payment systems are changing how money moves between banks. So the next slide. The goal of financial innovation. Let's walk through the key goals that drive financial innovation in today's world. So, as we expect those objectives, you'll see how they shape the development of new financial products and new services as well. So, the first major goal is improving both quality and availability of financial services. So, therefore, when we innovate in finance, we are aiming to make services not just better, but more accessible to a broader range of users. And the second critical objective here is increasing the speed and efficiency of financial transactions while reducing their costs. So you can think about how mobile payments have transformed, for example, the way we transfer money, making it nearly instantaneous and much cheaper and traditional than traditional wire transfers, for example. And the third key goal focuses on expanding access to financial services through new delivery models. So we are seeing this with mobile banking reaching previously unbanked populations and fintech companies creating innovative ways to deliver, for example, financial services. And finally, there is the regulatory aspect. Financial innovations help institutions meet regulatory requirements more cost effectively. And this is particularly important in today's complex regulatory environment. And these goals aren't pursued in isolation. The most successful financial innovation often address multiple objectives simultaneously. For instance, a mobile banking app might improve service quality and reduce costs and expand access and help with regulatory compliance all at once. And so, would anyone like to share examples of financial innovations? So, if you have encountered any. So I will give you a couple of minutes. Please, you can share your examples in the chat or tell us in voice. Please, do you hear me well? Do you see the presentation?
Yes, Prof. Yes, we can see the presentation. We can hear
Yeah, great.
Yes, Professor, can see the
So
presentation.
any example, you're welcome to share. Okay.
Yes,
Mhm.
there is, for example, bank apps. These days, banks have apps that help you transfer money, see your current account, what you have in your current account. You can do other financial services from it. Like back in Egypt, I have a bank account that I can do. How do I say?
Okay.
Like I can.
Mhm.
I can see my transactions. I can transfer money automatically to anyone in the same bank. All of that.
Yeah, P2P transactions. That true. So they are being made instantaneously, almost instantaneously nowadays. Therefore, in previous times, for example, you had to come up to the bank branch and make an application for the transfer in money, and therefore it was very uncomfortable indeed. And nowadays it's being made instantaneously. Actually, yeah. Thank you, Mahmoud. Okay. If there are no other examples, we can go on. The next slide.
I think
Yeah, please.
we can also look at, I think, think of if you have a Tinkoff account, you can basically like maybe open additional investment accounts, like maybe like a deposit account on your own. You just have to maybe like read the terms and see if they are suitable to you. And then
Yeah,
you
thank
open
you.
it and
Yeah, that's a very good example. Thank you, because the banks became some kind of financial ecosystem. So therefore, you can do all of the banking or financial operations, including investments and including I don't know even even ordering a table in a restaurant, for example, all in once, all in by means of the same application. And Tinkoff Bank is a very good example. Therefore, okay, thank you very much. The next slide, and let's talk about the major directions of financial innovation today. So, the major directions where financial innovation is hidden today are very obvious and very important. So I will highlight three key areas that are fundamentally transforming the financial services landscape. The first major direction is digital payments. So, as you said before, we are seeing remarkable innovation in this space, from mobile wallets that let you pay with your smartphones to peer-to-peer transfer system that makes sending money as easy as sending a text message, for example. And now we are witnessing the emergence of stable coins, for example, which aim to combine the benefits of cryptocurrency and the stability of traditional currencies. And the second significant direction is alternative lending. And this is particularly exciting because it's democratizing access to credit. And we have peer-to-peer lending platforms, for example, connecting borrowers directly with lenders, crowdfunding platforms enabling group investment in projects, and even microfinance initiatives making small loans accessible to entrepreneurs who might be overlooked by traditional banks. And the third key direction is wealth management, where, for example, we are seeing technology revolutionize how people invest and manage their money. For example, robo-advisors are making professional investment management accessible to people with the people with, for example, smaller portfolios, while, for instance, social trading platforms allow investors to learn from and copy the strategies of the successful traders. And what I find particularly fascinating is how these innovations are often interconnected. For example, how digital payment systems might integrate with alternative lending platforms, or how wealth management tools might incorporate social features, for example. So I hope that some of you used any of these innovative financial services. So please do not hesitate to share your experience in the chat. And we go on. So let's explore an important aspect of financial innovation, which is its double-edged nature. So while innovations bring significant benefits, they also introduce new risks that we need to understand and manage carefully. So let me start with the benefits, which are quite substantial. For example, financial innovation has dramatically lowered costs across the industry. And think how much cheaper it is to make traditional transfers today compared to just a decade ago. So we also seen vastly improved access to financial services with, for example, mobile banking reaching previously unserved populations. And perhaps most excitingly, that we are now able to offer highly customized services tailored to individual needs and preferences. And however, I want to emphasize that there is another side of this story. One significant risk is what we call financial exclusion. So as services become increasingly digitized, we risk leaving behind those who can't, for example, or want to adopt new technologies, often elderly or less tech-savvy populations. And this is a serious concern from a social perspective. And we also need to consider systematic risk. For example, as financial systems become more interconnected through technology, problems in one area can quickly spread to others. And of course, there is the ever-present challenge of cybersecurity. As we innovate, we create new potential vulnerables that need to be protected. And this is why balanced regulation is so crucial. So we need regulatory frameworks that encourage innovation while providing appropriate safeguards. And I often tell my students that good regulation should be like a good referee, present but not disrupt to the game. So the next slide. So now let's talk about the open banking through APIs. And in fact, it's one of the most transformative developments in modern banking, which is called, once again, open banking. So I find this particularly exciting because it's fundamentally changing how banks and financial services work together. So at its core, open banking allows third-party developers to build applications and services around the bank's data through what we call APIs. the abbreviation of the application programming interfaces. Sorry, we'll go on. But don't worry too much about the technical term, for sure. And think of APIs as secure bridges that allow different financial services to communicate and share data safely. Now, what makes this so revolutionary and how it promotes collaboration between traditional banks and fintech companies? For example, in the past, banks kept their data and services in closed systems. Imagine a fortress, for example, with very high walls. And now, through open banking, they are creating secure gateways that allow trusted partners, for example, to connect and build their new services on the platform of the bank. And this has unleashed a way of rapid innovation in several ways. For example, we're seeing fantastic new applications in payments, where you can now manage multiple bank accounts through a single app. And personal finance management has been transformed as well. For example, in the way when apps can now analyze your spending across all of your accounts and give you personalized advice. And in Lending, lenders can quickly access your financial health by accessing your banking data, often lending to faster and fairer lending decisions. And what I most of all fascinated is how this is shifting banking from a closed competitive model to an open collaborative ecosystem. And this is fascinating, really. Now I'd like to introduce you to embedded finance, a trend that quietly revolutionizing how we interact with financial services in our daily life. So it's quite fascinating because it's making financial services available exactly where and when you need them, and even if you are not dealing with the bank directly. So let me explain what this means in practice. Embedded finance, first of all, allows non-financial companies to offer financial services like lending, insurance, savings accounts, and payments directly within their own platforms. You might have experienced, for example, this without even realizing it. For instance, when you take a ride with Uber and pay seamlessly through the app, that's embedded finance. Or when Amazon offers you fascinating financing options for a large purchase or provide loans to its merchants, that's also embedded finance. So what makes this particularly powerful is how it leverages big data for credit decisions. For example, these platforms already know so much about their users' behaviors and behavioral patterns. For example, an e-commerce platform knows your purchasing history, return rates, customer satisfaction scores, and so on. And this rich data can help them make more informed lending decisions when traditional banks might make with just your credit score. And the really exciting part is the reach these platforms have. And they can offer, for example, financial services to millions of users who are already comfortable using their platforms. But it's a win-to-win situation, indeed, because customers get convenient access to financial services and platforms get to expand their revenue streams. So the next slide. Now let's explore one of the most revolutionary developments in financial innovation, which is called decentralized finance, or DeFi. And it's commonly known for this abbreviation. So I find actually this particularly fascinating because it represents a fundamental reimagining of how financial services could work. So what makes, in other words, DeFi unique is that it allows traditional financial services, things like lending, trading, insurance. It makes them to operate without any intermediaries. And there is no bank or financial institution in the middle of the transaction. And instead, these services run on public blockchain platforms with Ethereum being the most popular among them. So let me explain why this is significant. For example, in traditional finance, if you want to make out a loan, you need a bank's approval. And the bank acts as a trusted intermediary, therefore verifying your creditworthiness and managing the loan. In DeFi, on the other hand, smart contracts on the blockchain automatically handle these functions based on predetermined rules, and no single authority approval is needed, therefore. However, it must be emphasized that while this technology shows immense promise, it also comes with significant risks. For example, there are regulatory concerns because DeFi operates in a relatively new and often unclear regulatory environment. And security is another major concern because while blockchain itself is secure, the applications built on the top of it can be vulnerable to hacks and the other things. And we can't ignore the volatility in cryptocurrency markets, which can affect DeFi platforms as well. So before we move to the next slide, please tell me, have you ever experimented with the DeFi applications? So, and I would be interested to hear about your experience with the emerging technologies in this way. So please take your time to answer in the chat, for example, or in voice if you wish to. Okay, no one. Therefore, let us move on. Okay, now. Oh, sorry. So now let's discuss how artificial intelligence and machine learning are revolutionizing financial services. So this is an area that's particularly exciting because it's transforming nearly every aspect of how financial institutions operate and serve their customers. So let me share some concrete examples of how AI is being applied here. One of the most visible applications is chatbots for customer service, for example. Why? Because these AI-powered assistants can handle routine inquiries, for example, 24/7. And they are freeing up human staff for more complex issues as well. But what's really impressive is how they are becoming increasingly sophisticated, able to understand context and provide personalized responses. And we are also seeing AI transform how financial institutions make recommendations to their customers. For example, by analyzing vast amounts of data about customer behavior and preferences, artificial intelligence can suggest financial products that truly match individual needs. And in the area of fraud detection, AI systems can analyze patterns across millions of transactions in real time. For example, identifying suspicious activities far more quickly and accurately than traditional methods. And however, I think it's important to know that this transformation isn't without challenges. Because while AI can automate processes and significantly lower costs, it also raises important ethical concerns, particularly around bias in decision making. And for instance, if an AI system is trained on historical lending data that reflects societal biases, then it might perpetuate those same biases in its decisions. And the adoption of AI in financial services is still relatively low, and that's actually a good thing. So please turn off microphone. Yeah, thank you. And it gives us actually time to implement these technologies carefully and thoughtfully. We need to ensure that as we embrace AI capabilities, we are also addressing its limitations and potential risks. So there is a question. Has anyone here interacted with AI-powered financial services? Perhaps a chatbot or a robo-advisor? What was your experience like?
No, not really.
Not really.
No, no.
Okay. Let's go on then.
I
Yes.
use think of their chat bot. I was asking about investment. So initially, when you start, is the chatbot that will be giving you responses. But if the questions are beyond its programming, then it will direct you to an individual to maybe take off from where. So the responses are like the ones that it can answer. It will the one that it will not be able to answer. It will tell you that it will direct your question to someone to attend to you. Yeah.
Yeah. So it's not fully completely helpful, but it understands on the first stage what do you need, for example, and just transfers your request to the to a person. Yeah, but the chatbots are evolving with a very huge pace, and therefore I think that we'll need even a person just in the nearest years. Thank you for the example. We can go on. So let's discuss now a critical challenge facing traditional banks today, and it's how to rethink their innovation strategies in this rapidly evolving financial landscape. This is really particularly interesting because it's not just about adapting new technologies, it's about fundamentally transforming how banks operate and compete. So, and here the key challenge for incumbent banks is what I call the innovation balancing act, because they must optimize their existing business, the traditional so-called legacy banking services, and still generate most of their revenue with simultaneously exploring and investing in new innovations. And it's like trying to repair and upgrade a plane while it's still flying, you know. So to address this challenge, banks are pursuing multiple strategies simultaneously. Many are setting up internal innovation labs. For example, think of these as startups like environments within the bank where teams can experiment with new ideas and with new technologies. And they are also accelerating their digitizing efforts, moving traditional services online and to mobile platforms as well. And what I find particularly interesting here is how banks are approaching partnership with the fintech companies. Rather than viewing them solely as competitors, many banks are establishing accelerator programs and investment teams to collaborate with these innovative startups. And some are even going a step further, acquiring promising startups to quickly gain new capabilities and talent. And the most successful banks here are those that recognize innovation, that innovation isn't just about technology, it's about cultural transformation. They are fostering an innovation mindset throughout their organizations, from the boardroom to the front line. And that is a very huge challenge for the incumbent banks. Therefore, let's explore now what I consider one of the most fascinating aspects of financial innovation, which is the role of regulators. So you might think of the regulation as something that slows down innovation, but in reality, smart regulation can actually foster innovation while, for example, protecting the financial system. And the key challenge here for regulators is striking the right balance. On one side, they need to maintain the stability and integrity of the financial system. And we all remember the lessons from the 2008 financial crisis, for sure. And on the other side, they need to create an environment where innovative ideas can flourish. So it's like being a referee who needs to keep the game fair and letting it know. So one of the most exciting developments I've seen in the creation of is the creation of the regulatory sandbox. And think of this as safe testing environments where fintech companies can experiment with new innovations under regulatory supervision. It's like having a laboratory where you can test new ideas without risking the broader financial system. And we're also seeing a shift towards what we call principle and outcome-based regulations. Instead of prescribing exactly how financial institutions should operate, regulators are increasingly focusing on the desired outcomes. And these give innovators more flexibility on how they achieve regulatory goals. And what I found most encouraging here is how regulators are ensuring their frameworks promote competition while protecting customers. So they are recognizing, therefore, that more competition often leads to better services for customers, but this needs to be balanced with strong customer protection. Next slide. Let's look a little bit ahead at where financial innovations is headed. Why? Because the pace of change is not just continuing, it's accelerating, indeed. So, as someone who's been following this field closely, I find the upcoming developments particularly exciting. So, in common, there are three main forces driving this acceleration. First, customer expectations are evolving rapidly. Thanks to companies like Amazon, Apple, people now expect seamless, personalized experience in all services, including financial ones, of course. And second, competitive pressures are intensifying as fintech companies and big tech companies enter the financial space. And third, regulatory frameworks are evolving to accommodate new technologies and business models. And looking at key trends, we are seeing a most toward hyper-personalization, and where financial services are tailored to individual needs and behaviors at an unprecedented level. And embedded services are becoming more prevalent, with the financial capabilities being integrated into all kinds of platforms and apps. And we are also witnessing increased blockchain adoption beyond cryptocurrencies, and AI-driven processes are becoming more sophisticated and widespread. Here's something crucial to understand. This acceleration really creates both opportunities and risks. For example, for incumbent banks that fail to innovate, the risk of decline is very real. But for new entrants with innovative solutions, there is a potential to rise quickly and capture significant market share. And what I emphasize to my students is that responsible innovation balanced with stable regulation is vital for sustainable growth in the financial sector. And we need to innovate not just for innovation's sake, but to create genuine value for society. So the next slide. Now let's wrap up our discussion by reviewing the key points we've covered about financial innovation. So these takeaways will help us to understand the bigger picture of what's happening in the financial services industry. First and foremost, remember that financial innovation encompasses new instruments, technologies, institutions, and markets. It's not just about new apps or payment methods. It's a comprehensive transformation of how financial services work. So we discussed the three main goals driving innovation, like efficiency in operations, broader financial inclusion, and improved regulatory compliance. And overall, these goals often work together with successful innovations addressing multiple objectives simultaneously. And in terms of major directions, we explored several key areas like digital payments, revolutionizing how we transfer money, alternative lending, democratizing access to credit, and also robo-advisors transforming wealth management. And we also looked at blockchain applications that are creating entirely new possibilities in finance. And we examined both sides of innovation, the benefits like lower costs and improved access to services as well, and the risks, including potential financial exclusion for some groups. And open banking through APIs is enabling unprecedented collaboration between traditional banks and fintech companies, while embedded finance is integrating financial services into everyday platforms. So looking ahead, we see that the innovation accelerates. Incumbent banks must rethink their strategies to stay relevant. And through all of this, balanced regulation remains vital in order to foster responsible innovation while maintaining financial stability. So now there is a question. And let's take some time to answer it. So there are different options for the question. So I'll turn it on. So the question sounds as the following way. Which of the following is not considered as a type of financial innovation? And there are different options. Please give your option into the chat. And then after a couple of minutes, we'll discuss it. So take your time. Okay. So will you give your answers in the chat? Do you have access to the chat? Or you can, yes, or you can scan the QR and give your answers through the Google Forms. Okay, never mind. Let's turn to the right question then. So the right answer here is third, new ways of marketing existing financial product. Why? And because according to the lecture notes, as you can see here, financial innovations include new products, services, technologies, business models, and changes in infrastructure. However, new ways of marketing existing financial products would generally not be considered in financial innovation. So I hope that it's understandable. Now let's go on. I will provide you with these slides after the lecture, but nevertheless, I would like to ask you to think about the following questions you can see here on the slide. So it's like for discussion. For example, we can discuss these questions after the lecture or during the lecture. If anyone wants to tell us anything about this question, so you're welcome. What do you think about this? So please take your time, a couple of minutes, just to think and formulate your answer or your thoughts. Okay, what do you think? You can give your answers, for example, or your thoughts on that just in voice or in the chat afterwards or during the next lecture. Nevertheless, so we have to go on, and here you can find a very short glossary on the terms you've encountered during the lecture, like financial innovation, fintech, disruptive innovation, and so on. So, any questions on this paper?
No, Professor. No questions.
Okay. Thank you. And then please allow me to switch to the next lecture, and I will take a couple of minutes for that. So don't worry about it.